How's it going, everybody? My name is B and welcome back to Your Altcoins. Today, I'm going to take you through a trading method, an investment method, a new way of looking at charts to help you make decisions. Depending on whether you're an investor, depending on whether you're a swing trader, and depending on whether you're a day trader, you can use this technique, use this strategy to provide you with additional information to help you make better decisions, because as always, I'm trying to bring you guys as much value as I can for free. So hopefully you guys find some value in this video. Just like I hope you guys found some value in this Bitcoin chart video I just did. 3 Bitcoin charts no one is talking about. Very useful information in there. So here we are taking a look at Bitcoin in the manner with which we usually do. And for those of you that want one of those kind of state of the union, state of the market update videos with the news and all that kind of stuff, you can expect one of those later today, because in the morning right now, I need to take my lovely wife to see the doctor because of our soon to be born daughter. So we will do this video earlier, and then in the afternoon, I will give you guys the state of the union type video. So this is the chart we usually look at when it comes to Bitcoin. We're looking at it on the 1 hour right now. That's why it's so jagged. And voila, we have switched it to the day. So the different way we look at the chart. I mentioned other ways like logarithmic scale and things like that, but I have a tool that I want you guys to maybe make use of to help you make better decisions, whether you are a day trader, whether you are a swing trader, or whether you are simply an investor, and how to differentiate using this tool with those 3 styles based off of the time frames you're looking on. If you're an investor, you want to look at day candles or even week-long candles. If you are a swing trader, you definitely want to look at day candles and maybe even 4-hour candles. And then if you're the day trader, you want to be looking at like an hour less to give you an idea of what to do with your trades, with your transactions. So we are on tradingview.com. Link in the description down below into my useful links section. You'll see links to TradingView, market capitalizations, ICO alert, and Phil Cohn's tutorials because he's awesome. Tradingview.com. This is free software. Now, for those of you using the free software, you're only limited to a certain number of indicators you're allowed to use, which is why one of the indicators I have is actually 3 indicators rolled into one to help you. Now, indicators in general are not the end all be all. There is no indicator, no one indicator that is the holy grail that will teach you and bring you to trading glory. But they are useful tools, especially when used in conjunction with each other. So we're going to be talking about moving averages because it is a very simple technique to use to help you make better educated decisions. Now, moving averages are a lagging indicator. They lag behind the price. So if you're trying to pick the perfect highs and the perfect lows, you're going to miss them using this indicator. Something to keep in mind, which is why if you're trying to pick the perfect highs and perfect lows, you use other indicators in conjunction with moving averages to help you find them. So how do we access the moving averages? Which moving averages do we use? What numbers do we use, etc.? So indicators are up here in the top of TradingView. Indicators, fundamentals, economy, and add-ons. And in here, you have a whole bunch of stuff. There are so many, guys. It's almost intimidating to the first user. So what I want you to type in is moving average, moving average. So we have all sorts of moving averages. I use the exponential moving average, and you can click that and use it. I have it starred right now. In total, we want to use 4 different moving averages with 4 different values. However, the free version of the software only allows 3 indicators. So what you do is there's a bit of a cheat. You can type in TEMA or triple moving averages. And TEMA will give you access to a triple moving average. So if I go to my favorites, I already have them. So up here, I have my TEMA and my EMA. We'll turn off volume for now, just to make it a little less cluttered. We'll maximize this. There. So I'm going to turn on TEMA, which gives you 3 lines, and then I'm going to turn on EMA, which gives you the 4th line. Now we have 4 moving average lines. I'm going to talk to you about what they are. I'm going to explain to you how to set them up, and I'm going to go from there. So the 4 values. Actually, no, before we get into that, let's talk about what a moving average is. A moving average is a line that takes into account the previous candle's worth of values to give you a value. So for example, if you have a moving average set up to the number 10, the value is 10, it'll calculate the last 10 days of candles and then give you an average and put that on the line, which is why the indicator, this line, seems to drag behind the price when the price is trending up and then drag over the price when the price is trending down. This is a way of showing positive movement or negative movement. So the values I have set in place are as such: 8, 13, 21, and 55. So each line represents 8 days or 8 increments behind, 13 increments, 21 increments, and 55 increments. How to set this up? Under each of these tools, there is a wheel icon. You click that, it'll bring you to this chart. You can adjust your lengths. Why did I choose 8, 13, 21, and then over here on this other, the fourth EMA, 55? Why did I choose those? Very, very simple. Those are numbers in the Fibonacci sequence. Those are all numbers in the Fibonacci sequence, and I happen to really enjoy the Fibonacci sequence in trading. So 8, 13, 21, and 55. After you put in 8, 13, 21, you can then change the colors. I have green, blue, yellow, and red. So I've got red, yellow, green for a stop sign, and then the blue as my smallest indicator. So blue is the 8, green is a 13, yellow is a 21, and then red is the 55 style, red. I made it a little bit thicker too. You can adjust the thickness on these, right? I mean, like that, that's good. So why am I using these? What do these do? How can these help you as a trader, as an investor? Very simple. Let's rewind in time. So we're looking at Bitcoin way down here in the $500 range. Here we go. Here's an example. So the blue, the green, the yellow, and the red are in order of fastest moving average to slowest moving average. Blue takes into account the last 8 candles. Green takes into account the last 13 candles, yellow the last 21, and then red the last 55 candles, which is why you notice it's very hard to move the red, but it's very easy to move the blue. The blue line is going to follow tightly the price action, but the red line takes a lot longer to move because it's taking into account the last 55 candles, and on a day scale like we are, that's the last 55 days of price action. Here is the rule of thumb for an investor, for a trader, and for a day trader. This is the rule of thumb. How we're going to apply it depends on your style. The rule of thumb is when the blue and the green and the yellow and the red, it goes in this colored order, right? Hold on, we gotta get this view so I can start doing lines. When the lines trend like this, one there, one there, one there, one there. And on top is, we have the top is blue. Changing the colors every time is just a pain, but we got to do it for the purposes of demonstration. And then it goes green, and then it goes yellow. Now, some people may be thinking, B, you're making this very, very simple for people, but I like making it simple. The simpler it is to understand, the simpler it is to put into practice. When your prices are like this, and the moving averages are blue over green over yellow over red, are smallest over biggest, this means the price is trending up. You can clearly see it right here. Blue, green, yellow, red, price is trending up. You're going to have a junction. You're going to have a crossover point here, and then again here. And using these crossover points are how we know when to take profit and close a sale. So once you have a crossover of these values, and the values change from blue, green, yellow, red to red, yellow, blue, green, that's when the price is trending down. Now, this is an example of how it can come down and then come right back up. But let's use an example. Let's say you entered a trade here, right? Let's drag this over. You enter the trade right here. I'm going to magnify it as best as I can. You see a fanning out of the prices. You enter the trade right here, and you stay in the trade, and you stay in the trade, and look, watch this. The trade, the value went all the way up to here, all the way up to here, and it came crashing down. But you didn't get out of the trade yet because the lines didn't cross over, right? It came all the way down here, but the lines didn't cross over. All through this, the lines did not cross over. So you stayed in the trade, and you stayed in the trade, and you stayed in the trade all the way to here. What's the profit on that? Get out roughly here. You're looking at a 68% profit, right? You can do the same thing with shorting. So once the price changes and the blue, the green, and the yellow come beneath the red, the price is going down, and you can use that to short if shorting is your thing. And this is a strategy of moving averages that you can use across all sorts of time scales to help you paint a picture of what you're looking at based off of your trading strategies. I'll give you an example. Let's switch this exact same Bitcoin chart to the 1 hour. Now we're painting a different picture. You can see the price busted out right here, right? Here's that price bust out. Right here is a price bust out. You buy in here. So first we're red, yellow, green, blue, and then it switches blue, green, yellow, red. Positive. We're in a positive sign. You go up, you go up, you go up, you go up. And you go up and you go up and you go up and you go up. And we're still, the price dips beneath the red, but the lines haven't crossed over, so we don't sell out yet. We go up, bam, all the way up to here. you finally see a price crossover right here. This is a very powerful strategy depending on your time frame. If you're a day trader and you want to trade on the 15-minute candles and you really want to micro this thing, you totally can, right? You totally can. Even on the 15-minute candles, you want a day trade, you can totally do this. So you buy in here, right? You don't sell, you don't sell, you don't sell, you don't sell, bam. You sell here, you wait, you wait, you wait, you wait, you wait. You buy here, you wait, you wait, you wait, you wait. You maybe sell here, right? Sometimes if you're a day trader, maybe you sell here, right here. Oh, we buy back in down here, a little bit of profit, right? And you go up, you go up, you go up, you go up. Oh, you sell right here. You see how very obviously lucrative that is? So you make this buy of 12%, then you make this short of 2 or 3%, and then you make this buy of 5%. You see how this can add up very quickly using this average, using this trading for day trading. Clearly, it's not a foolproof plan. When the market is overall trending up, it's very easy to do so. But at times like right now when the market is trending down, it's much more difficult. So another reason I'm bringing this to your attention, especially when it comes to Bitcoin, is I want to talk to you investors, okay? I want to talk to you investors who want to get in on Bitcoin and want to know that we're still in a bull market. So I showed you guys this on terms of the day trader, down to the 15-minute, the 30-minute, the 1 hour, and how this strategy can be useful. I showed you guys the swing traders who look on things on a day scale, so you kind of get a feel for how the market is performing on a day-to-day scale, right? So for example, with Bitcoin, we have the price crossover right here, and we still have not quite come up into a bullish trend using the moving average strategy. Still not quite, right? We threatened. When the price came up over the 55-day moving average, we threatened, and then it came back down. And then we got a little bit closer. I mean, look how close the moving averages came for the crossover. So close, guys, so close, but we're back down again. Why this is actually kind of useful. I like the fact that we have tested this multiple times, that we have pushed for this EMA crossover multiple times. We came close here, we came really close here. I feel the next time we come up and try and push the crossover to put the blue, the green, the yellow over the red, I feel it's finally going to go. We're that close on a day scale to finally seeing a crossover. Now, what about investing? Let's go to the week scale and then see what we're looking at. It changes things dramatically. Here we are looking at Bitcoin on the weekly scale with the moving average strategy. So remember the values, 8, 13, 21, 55. Now, with weak candles, this is the 8-week moving average, the 13-week moving average, the 21-week moving average, and the 55-week moving average. And for those of you who are bullish on Bitcoin, this will make you very happy because on the weekly, we haven't even closed remotely close to the 55-week moving average. We dipped into it, but we've come up over it. So this means that it's still bullish. We're in a bit of a lull on the weekly, but we're still bullish. This candle right here, this green candle, when we closed above all the weekly moving averages, I personally was so excited. I'm like, yes, we're doing it, we're going, and then sure enough, boom, right back down, which was very disappointing. So what we want to see, for those of you who are investors, what we're all looking for and waiting for is a candle that closes above the moving average. This green candle closed through the moving averages. You want to see this green candle happen and then have a green candle close above the moving averages. That is an extremely bullish signal. So you can use this moving average strategy. If you're an investor looking at on the weekly, this provides you with some comfort. This provides you with some reassurance that overall, even though we're down so much from our previous high, overall, we're still quite bullish on Bitcoin. For you swing traders, you can take a look at this on a 4-hour scale, on a 5-hour scale, on a 10-hour scale, on a day scale to help you paint a better picture for what days you want to enter trades, what days you want to leave trades. For example, as a swing trader, you could have entered a trade here on, what date was this? This would have been the 14th of February, and then maybe gotten out of the trade here on the 23rd of February. That's 2 weeks of profit right there. And then using other indicators, you may have been able to find this high using other indicators as well. And then you have you lovely day traders who want to look at the 15-minute candles and know, okay, get out here, get in here, get out here, and make profit that way. So that is the 4 moving average strategy that can be used for day traders, swing traders, and investors. And I hope you guys found some value in this video. If you did find some value, share it with the friends. They can find some value as well. And if you're still with us after all this time, hit that subscribe button. Join us. We're almost at 50,000 subscribers. And as always, thank you very much for watching.